Leone. I am the mortgage operations manager with Genesee Regional Bank. Genesee Regional Bank is a local community bank in Rochester, New York. We do on average about $450 million a year in annual loan volume. Typically it is 85 to 90% purchase business. Outside of the last 2 years, we had a little bit higher refi mix, but we've gone right back into that purchase model, which is important to as we talk about the cost savings here that we're going to discuss.
Very good. And I'm Lisa Walls, and I'm with Partners Credit and Verification Solutions, and we're a full service credit CRA. We offer all the credit and verification services available to the mortgage industry. What makes us different than some of our competitors is that we have a proprietary system. We own our own technology, which makes us a little bit more nimble and able to customize things and meet the needs of our clients and our partners. So I'm honored to be joined by Joe. They've been a partner of ours now for a few years, and we started the relationship within the TMC connection. So I'm going to let Joe kind of lead off and talk about how we got to where we are today, but we're honored to have him today.
Yeah, and I think that's a great starting point is talking about how we got here. So we had a credit vendor that we were working with for years, and really couldn't have fathomed making a change at the time because our rep at the time was available nights, weekends, taking calls from loan officers. And, it was one of those things where we were very dependent on them. Except as a mortgage operations manager, I'm always looking at ways of reducing cost. And as our costs with our credit vendor kept rising, I came up with an idea of what I thought, was a way to reduce the cost, and approached our vendor with it. And, the only solution they kept coming back to me with was, have you thought about looking at the previews, where you're pulling one bureau, it costs about $3 to $4. And for us being a purchase money vendor, we didn't want our loan officers out there, issuing pre-qual letters with a one bureau preview without that ability to run DU. We've built an excellent reputation within the community with our referral partners and real estate agents. So we didn't want to take that chance of issuing a pre-qual just based on a preview model. So as I discussed these different ideas that I had with them, I just kept getting answers. Well, we can't do that. It's not something we'd be able to do. We approached a few other vendors. Same thing. They kept coming back with us with this one bureau preview until we, had to sit down with Partners. And the idea was that we wanted to reduce our cost upfront. Being able to reduce that upfront cost on that initial pull, but charge more to the borrower once the loan actually became a loan, and only charge a higher price for credit, or be charged a higher price for those credit bureaus on the loans that actually originate. So how do we do that, right? So we needed to figure out a way to be able to, trigger those loans so that it was recognized that, yes, this is a live loan versus an individual pre-qualification credit pull. And that's kind of where Partners came in. Their ideas, we were able to kind of sit down and they actually listened to what we were trying to accomplish and it came up with a solution. And, as Lisa mentioned, they have some capabilities with the technology that they offer. So the solution was that we would make that initial credit pull up front, do our pre-qualification. We're still able to run DU. We have all three bureaus, so there's no surprises coming up once the borrower goes under contract. And then once we ordered our flood report, it would trigger, which we also order through Partners, it would trigger an enhanced bundle price. And, that enhanced bundle price would then get passed along to the borrower. I can say, we have been through several audits with the FHA, VA, some of our internal audits that happen as well as some external audits as well. And our initial concern was how do we do all this in a compliant manner? But, because we're able to provide one receipt for that credit bundle, none of the audits or compliance issues have arisen from making this change in how we charge the borrower. So what does that look like and what does that mean? Upfront, we were saving $20, about $20, $19.75 on individual pulls and almost $27 on joint credit reports. So a gross savings for our bank that we saw was roughly $65,000 in the first year, because all those loans that we were pulling credit on, we were saving either $19 or $26 per pull. Now, we did have to account for those loans that we activated the credit bundle and then they withdrew or were declined. So those cost us a little bit more. So our net savings was right around $30,000 for the year. Now, I will say, as a $450 million mortgage bank, if you think of $1 billion or $1.5 billion mortgage bank, those savings are going to triple or quadruple in that instance. So, on a smaller scale, we're saving anywhere from $30,000 to $35,000 a year. On a larger scale, you're looking at in excess of $100,000 a year in savings. So, just by listening and kind of being that good partner, we were able to come up with a solution where now, not only as partners, our credit vendor, they are our flood vendor. We've recently activated debt activity monitoring, and talking to them about some other solutions as well, and being able to be partners in more than just the credit bureau reporting area.
Well, I appreciate all of that, Joe. And I will tell you that is one thing that Partners likes to do, is collaborate and really partner with our customers so that we can get to know your process. So what we really intend to, and I heard you speak to it, where we intend to learn your process by learning to know what you do every day, and then just try to figure out how to make our solutions fit your process, not your process fit our solutions. So would you say that happened through the whole course of the negotiations with the products? And
yeah, absolutely. I mean, again, I mentioned in the beginning, we did talk to several other vendors about this type of setup, and none of them could get past the how to trigger an additional price. And I think I met with, when I met with Tracy and we talked about it, she was able to kind of envision it, and, brought the technology team in to say, how can we do this? And, as a small community bank, we're always looking for ways to be more efficient and different ways to be agile. And, having a partner that's agile is just as important, because as you come up with these ideas, having somebody that's willing to work with you to help bring them to life is very important in this market.
Can you speak to the fact that, you have that higher price that you're disclosing to your borrower, and then you're charging that at closing? Have you had any pushback regarding that?
We've gotten some initial questions on, okay, the credit report says this price, but you're charging X. And, what we've had to do to satisfy some of those, requests is go right into the partner's website, and we can pull a bundle receipt, which shows the true price of the credit report and flood bundle that we're being charged. So by pulling that full receipt in and providing that to those questioning it, it satisfied all that. So, that was, again, part of our initial concern about, doing this compliantly and charging that higher price compliantly. But because we're able to get that credit receipt bundle, or that bundle receipt, we're able to solve for that. So we've disclosed the higher credit price and the higher flood price, and it doesn't exceed what our bundle price is. So the all-in cost to us is the same or more than what we're disclosing.
Okay, fantastic. Well, I can say from the partners side, it's been a pleasure working with GRB from the beginning. So you guys have been very open and honest and forthright with the information that you share, which has helped us, help you find a solution that meets your needs. We're glad to know that you're saving so much money, and that especially during this time when everybody's starting to look at the margin compression and just ways to cut cost, because the volume is down, across the board. That's no secret, and everybody's experiencing it a little bit to some extent anyway. So we're pleased that it's worked out so well for you, and we're pleased that you continue to expand your products with us, and you put your trust in partners. So we're happy to have you as a partner.
Absolutely.
And we're happy to be a part of the TNC as well. So thank you, Amy, for putting this together and helping us host this video. And if anybody has any questions, they can certainly reach out to Partners Credit, or I'm sure you can reach out to Joe if his peers have questions and want to talk to him. I'm offering that up, Joe, so I hope that's all
Yeah,
right.
no, I'd be happy to do it.
All right.
Absolutely. I mean, with this, so the link to this recording, which I kind of hit it right when you were introducing yourself, Joe, because I got distracted. But so the link to this will be sent out to everybody who registered for this. I will also give your contact information if anybody does have any questions. Really awesome that you guys came together, and super impressed that, you know, Partners Credit is so flexible to be able to, I mean, I love that. I love that you don't have to fit your needs to them. They fit what they can do to your needs. And that's super important. So we love Partners Credit. And Joe, thank you so much for coming and talking about your experience with them. So with that said, I hope you guys have a great rest of your week, and hopefully we'll see you in Chicago in September. And we'll talk to you soon.
Okay. Thank you.
Thanks, Amy.
Thank you.
Okay, thanks.